You point out in the survey that retail banks have been leading this rise in confidence, investment banks really lagging a little bit, but retail banks really entered it first, didn't they? They hit that trough a little bit sooner than the investment banks did.
Absolutely. Towards the end of 2007, when the National Credit Act came into effect, and in the year following that, retail banks quite quickly lost their confidence levels from 100 all the way down to 25, whilst investment banks maintained relatively high confidence levels up to the end of 2009, and it's only in the last year that they've started to show the effects.
Well, to put it into perspective, trading at around 48 points at the moment, but those banks did hit a level of 100 index points for most of 2004, 5 and 6. So, I mean, we're really at less than half those levels at this stage.
Absolutely, and especially up to the beginning of this year, it has been at its lowest levels because, as I mentioned, investment banks were still propping up the overall confidence. Although retail banks were at a very, very low level up to the end of last year. From the beginning of this year, as the low interest rates started to filter through to the man in the street, those confidence levels have been picking up very slowly though, but has been picking up at a constant trend, unlike investment banks where, although confidence levels have been going up and down depending on where global markets are, because the impact of global markets has more direct impact on investment
so
banks.
More so than with the retail banks? More
so than with the retail banks. I think if you look at the retail banks, confidence is largely derived from the man in the street and affordability, as I mentioned, the National Credit Act, and just the ability of the man in the street to repay debt has been a key challenge, and we're starting to see that banks are starting to lend more freely. Credit extension is starting to pick up on the retail banking side. At this stage, the investment banking side, there's just no real demand to really lift those confidence levels.
Of course, you point out in the survey that there are falling impairment costs at the retail banks, and we've seen that with the results that came through most recently. So it was the half-year results for the big three, and then also First Round's most recent annual results. But they're not really falling as fast as they would have expected at the beginning of the year. So how do you see the switch in sentiment, though? Because 3/4 of the way through the year, things aren't recovering quite as fast as they expected a few months ago.
Yes, and also in the half year and final results a couple of weeks ago, the banks were generally more cautious around the outlook for the rest of the year, and it is very dependent on the ability of the consumer to actually take on more credit, given our regulatory environment, and the pace at which that has been picked up is slow, and it's probably also, if you consider over the last 2 years, people are probably reluctant to take on more credit, given the shocks that we've experienced locally and globally.
And of course, it looks like companies don't want to borrow either at this point, and that's really affecting the investment banks.
Absolutely. We can clearly see that other than corporate finance activity, where we're starting to see more activity come through, all other aspects of investment banking still remains sluggish.
Typically, how far behind retail banking would investment banking lag in a recovery like this?
There's no clear indication. It's obviously, as I mentioned, dependent on global markets and the demand and growth within the economy based on investment and the outlook, both locally and globally. If you consider investment banking, we've had some instances in the country with strikes. We've had the Greek banking crisis that has put some dampers on the global economy and outlooks.
How's this all fed through to profitability of banks?
If you look at the fee income, definitely has been more sluggish than anticipated. A couple of weeks ago, there was also a survey done around bank charges, and it's clear that the rate of growth isn't linked to inflation in that regard. And it's probably also looking at the general market and remaining competitive in that market. So fee income has remained sluggish, and as you mentioned earlier, the recovery is slower than anticipated. So there is improvement, but and although our banks have remained profitable, the recovery is slower than anticipated.
Was the survey conducted before or after the most recent interest rate cut, the one at the September meeting?
It would have been done during that period, so it would probably, as interest rate come, it takes a while to filter through, so we'll probably see some more of those effects.
So that should reflect in some of the coming surveys. But at the same time, there's the double-edged sword of interest rate cuts, because you also have that endowment effect within banks, and that's going to hurt them as well going forward, isn't it?
Absolutely, and as interest rates remain low, that is definitely going to have an impact. But on the other hand, as impairment levels come down, as affordability improves in the market, we hope that sets that off.
And well, as we mentioned, at 48 points, we're at less than half of the high that we've seen in the past few years. How long do you think it's going to take to get back to those levels? Do you think we would get back to those levels, since we do have new regulations? We have the NCA, we have Basel III coming in a few years' time. And those are things that are going to continue to weigh on the sector. Do you think we will reach those 100-point highs we had previously?
I don't believe that will happen in the short or medium term. As you mentioned, there's a number of new regulations that banks will have to implement, and the cost of implementation, changes in IT systems, and the potential impact on capital will have to be considered as that regulation is formalized globally. So definitely it will take time, and it remains to be seen whether we'll get back to those levels in the longer term.